This tutorial has to do with a mortgage game, and it's primarily focused on when you buy a newly built home, because there are certainly games associated with it that we help you, I guess, through this maze of things that are done. But oftentimes when you buy a new home, the builder is associated with a mortgage company, usually a part owner, whatever. Now, I as well have a mortgage company. I've got a mortgage background of 9 years. What happens oftentimes is they will incentivize you closing cost or $5,000 or $10,000 if you use their mortgage company. Now, if we can imagine this, they're a mortgage company that they basically just have people that almost have to use their mortgage company. They're entrapped. So oftentimes the level of consultation, for one, is not very good as compared to a very consultative approach where we evaluate your long and short-term payment and equity objectives and develop a loan scenario that fits your long and short-term financial strategy. The other thing that happens, there's something called a yield spread or a rebate, where let's say I give you $4,000 if you buy my home. Well, what I'm going to do, what the mortgage company does, is oftentimes they will just increase the rate above market rate so that the lender will rebate them $4,000, and they take that $4,000 and pay your closing cost. Was it free? No, because now you have a higher rate and you're actually paying for that freebie. You know, it's quite a trick, and it happens all the time. And oftentimes we even have seen scenarios where you put down earnest money, and let's say you've got some issues with your credit. So what will happen is they'll say, well, we can get your credit turned around before you end up closing your house. So that doesn't happen. You lose your earnest money and you can't get into the home. So there are a lot of different factors that we're concerned with. We will even use, like when we begin to work together, you'll be introduced to one of our mortgage guys or even me, and we will even have you tell the builder, when we get to that process, that you're using a friend in the mortgage business, me being your friend. Now what happens is, because what I'm trying to do is get you to use me to leverage a better deal with the builder, okay? I'm basically working myself out of a deal, if that makes sense. So what we'll do is you tell the builder you're using a friend, which is me. Don't tell them it's me, it's just a friend. Therefore, their mortgage company knows that if they give you this $4,000 or $5,000, they also know that they have to be very aggressive on the mortgage rate. And therefore, when that happens, you get the best of both worlds. You're going to get a great value on the home, you're going to get money to pay your closing cost, and you're also going to get a very aggressive rate. So that's a strategy that we employ that we'll teach you and be more specific about when we get into the real meat of everything. Another huge critical factor that you need to understand is that, let's say you're buying a home, let's say, and they incentivize you to use their mortgage company, okay? And let's say you're not using us, we're not working together, and so you end up paying $20,000, $30,000, $40,000, sometimes $100,000 more for your home than you should. And then they incentivize you to use their mortgage company, okay? What happens is the mortgage company gets in the process, helps you through everything, you get everything working smoothly, but at some point an appraiser has got to be done. So now you're using this builder who's having you use their mortgage company, and the mortgage company works with this appraiser. The amount of pressure on this appraiser to accomplish the value that is too high so that you can get the mortgage, so that the builder can build a home, is just crazy, and it happens all the time. We had an incident the other day where we were the value just wasn't right with a client. And so what happened is my appraiser called the builder, said, I'm having and we actually had it on speakerphone. It was quite funny. So my appraiser, who actually works in our office and he's a 21-year appraiser, he's phenomenal. He ended up calling the builder and said, I'm having trouble with this value. And she said, well, what value do you need? Well, that's not the question. The question is, what's the value of the property? And anyway, she ended up going through files and she said, that won't work. Oh, that one won't work. No, this one won't work. And then she said again, what value do we need? That happens all the time. Whereas we've even gotten to a point where, let's say you're using a different mortgage company, but they're associated with the builder. We want you, if the mortgage company will allow, we want you to hire an independent appraiser, somebody that's not in cahoots with the mortgage company and somebody that's not in cahoots with the builder. Critical information. Thank you.